Hey guys, Mr. Cody here. I'm broadcasting this, or recording this, I should say, in Tigerville, South Carolina, on campus at North Greenville. I'm in my office, and I am using a laptop for the audio, so the microphones might not be so great. I'm going to see how this compares. I know at home I have a really nice microphone, so I'm going to try to do most recording from home, but I am going to try to do more content. I know I did those couple problems or that couple little short videos in for chapter 12, and I wanted to do some more with you guys, at least let you know I'm here for you, and that I'm actually hands on and accessible. And also, I want to, I've taken online courses and I know how they are, and it's kind of a lot of it's self paced, and sometimes it's not as clear as it might be. And so I'm going to look today here for a few minutes here at the chapter 18 PowerPoint. And this chapter here is what it really starts getting into managerial accounting, which is the focus of principles two. I did start us off with partnerships and corporations, which typically they fall under the financial management, or I'm sorry, the financial accounting umbrella, which would be principles one, but it's usually not. You just don't get to it in time, and so I wanted to put those in there first, and hopefully those weren't too bad for you. I do want to come up at one point and do one of those treasury stock problems with you guys, so you can kind of see how my mind works, and hopefully, if you were confused on that one problem, it will make more sense now. But anyway, on this slide here, you see the differences between financial accounting and managerial accounting. And the big one is the first one, where it's the target audience. Okay, the financial accounting is for investors and creditors, right? So the goal there is kind of a uniform process that everybody follows, so everybody's financial reports or financial statements are done the same way, at least following whatever GAAP rules are available. And then under managerial, though, you see it's so managerial is targeting the insiders, right? So it's for the inside managers, and it's going to help them make decisions. And you see, if you go down to the flexibility, under financial accounting, we do have some flexibility. You can do LIFO, FIFO, weighted average cost for your inventory costing. Under accounts receivable, you can do percentage of sales versus percentages of accounts receivable for your allowance. So there's a little flexibility there, but you got to stay within those rules, whichever ones are available. But you see there under managerial, there is no GAAP rules. It's really whatever works best for the company you're working at, right? So this is not like it's geared for like your controllers or your internal accounting departments within large companies, right? And that's where you're going to see most of the managerial accounting coming into place. We're going to do some product costing. We're going to do some budgeting, a little bit of budgeting, and you'll see kind of coming forward. It's going to get a little tedious, but I think you'll enjoy it. So let me go forward a little bit here. If this is going to work. I'm trying this software on my laptop for the first time. Let's skip that one. Career paths. Here we go. And so the first thing we're going to do is, the focus here, like in principles one, or just your basic financial accounting, the goal there, you start off with like service industry jobs or companies because they don't have inventory. So you start there, you learn your T's and your debits and credits, and then you're going to get to, later on, you're going to get to your merchandisers where you add in inventory, right? And so now, though, this here is really directed to manufacturers, right? So for the most part, managerial is your manufacturers. And I know there's a lot that's not made in America anymore, but we have up here in upstate, we have Michelin, we have BMW. I know down in Charleston, there's a big Boeing plant, and they're going to have some, they'll have a lot of this going on there with some of this direct cost, indirect cost stuff. And you see down at the bottom, and it makes pretty good sense that for a bicycle, your direct costs are going to be the components of it that you assemble. Some places will, you might actually make the frame, actually get the tubing and bend it and weld it together. And then some of that stuff you might just buy it already finished, like the seats might come from a third party. The tires, we might not make those in house. Those come in as well. I grew up down in Orangeburg, South Carolina, and my father worked at it's called Husqvarna now. So if you go to Lowe's and Home Depot, you'll see some Husqvarna riding mowers. I actually just bought, well, it was like 2 years ago, one of the zero turn Husqvarnas. I love it. But anyway, um, and so there is some, definitely some manufacturing around here, and also there, I have a little experience with the assembly line from my summer jobs. Because my summer jobs, I'd work at Husqvarna with my dad. Not near him because I was doing grunt work. I was packing repair parts for a company you might remember called Sears, because back then they were making tractors for it was Craftsman tractors. And they're not. It's not the same company anymore. So if you see a Craftsman tractor now, I'm not sure who makes it. But anyway, I was getting to is back then they made the mower decks, they made the hoods, they made the frames, but and they painted a lot of stuff. But the tires came from somewhere else, and so did the engines. Back then it was Briggs and Stratton. They make go-kart engines. There's another company called Tecumseh and Kohler. Kohler's still around, and also nowadays you get pretty much Kohler and Kawasaki, right? So those would be direct materials or direct costs you see there for manufacturing, and we'll call those the first 8 bullet points, I guess. Tires down to pedals, those are direct materials. Okay, and we're going to call them direct materials. And then the two below that, the bike maker wages and the bike maker benefits, that's going to be direct labor. Okay, so direct labor, you see down the bottom on the right. I'm sorry, the left. I'm so bad with left and rights. I can do debits and credits, but I can't remember my lefts and rights. But down the bottom left, you see the assembly line workers. Those guys are direct labor. But when you go across to the right, you see some maintenance guys, and those guys would not be direct labor. They're going to be, indirect labor. We're going to call it that, right? And so you see all of our indirect costs there: accounting department, administration, your managers, electricity, what do we call it, utilities, right? Insurance and depreciation. So let's keep moving forward here a little bit. Again, direct materials. Okay. If you go back to that slide, you're going to even down here you see that what one thing that's missing is paint. And so, and I would not call that a direct material, even though it is, right, to a degree. It's just hard to cost effectively determine the proper amount of paint, I guess. And usually stuff like that, like I think there's a baseball example I've seen before where the leather, yes, the core, yes, but like the stitching, they didn't want to use that as a direct material, which I found kind of strange. And even to a degree, paint, I feel like that can be somewhat uh, easy to do, but then sometimes I guess when you're changing out the colors, you're going to have some waste, and it'll be hard to keep that cost effectively traced to an individual bicycle, right? Here's your labor, of course. It's just going to be the assembly line workers. Everybody else, okay, is going to be indirect or potentially not even a product cost. That uh, that accounting department that you saw earlier on that slide for indirect labor. If that accounting department is off-site, it would not even be it would be a period cost, and we would have that under a general and administrative expense. But if they're on site, if they're within the factory, then that would be an indirect labor. Okay, so not direct. And then we got overhead. This is all the other stuff, right? You see our indirect materials here: screws, nuts, staples. That makes a lot of sense. But also your indirect costs, factory utilities, again, insurance, manager salaries, CEO salaries, that kind of stuff down there. Indirect labor, maintenance workers, forklift drivers. Down in that factory I worked at, they actually had a cafeteria, at least way back then, where you can go buy lunch, and so those workers would be indirect labor as well, right? All right, so let's get forward a little bit more here. All right, so here we go. You see that this is just definitions here. Prime cost is simply direct materials added to direct labor, and that's what you would call prime cost. And over here, direct labor with factory overhead, we call that conversion cost. Okay, so those are just two terms, and we will use those a little bit here and there. I think we'll use conversion cost later for chapter 20. Let's keep going. All right, there you see it. This is, you can call this like your total product cost. I like to call it total manufacturing cost, and it's the three things added together. Um, and we'll talk about that just more in just a second. Again, so this stuff here, the manufacturing costs, they're going to get added to inventory. So we're going to capitalize um, those costs, and then so excuse me, they'll be in inventory until sold. Once they're sold, that's how they get to the income statement. If that makes any sense, it should. I hope it does. And so in this case here, our manufacturing costs, we're going to add those to inventory, and then once the product is sold, it'll get expensed. All right. Um, and then our period costs are the ones that we did all our work with in Principles One. Okay, all the the service industry, a lot of salaries and all the same stuff, utilities, and that's all going to be in there too. But it's just not traced to a product, all right? And because because they're not manufacturing, we're not going to worry about it. Even if it's a retailer, you're going to buy the finished good, and you're going to increase the price and try to live off that margin, right? So that profit margin. All right. You can come back to that if you need to. Let me go back there real quick. Here's some good, just some good examples, right? So it's a pretty good slide for that. Exhibit 18.7. Okay, there was one more thing I want to do. Here we go. And so the difference being, all right, so remember, service industry, no inventory. Retail, well, service companies, no inventory. You get your retailers and wholesalers, they're going to be just merchandise inventory, right? They buy finished goods, they sell finished goods. There is no construction of the goods. We're here with manufacturers, we are going to actually create the goods. And so you see, we're going to have three different inventories. Isn't that fun? Very fun, right? So three inventories here, raw materials, and that will hold all materials, okay, not just direct materials. So yes, the tires and the handlebars and the seats for the bike goes in there, but so does the nuts and bolts and screws that are going to be used as well. Okay, so both indirect and direct will go into our materials inventory, and I'll show you that in just a minute. And work in process, that's where we're going to add our costs together, and then finished goods is going to be essentially the cost of what we just finished, of course, and that's ready to be sold. Okay, and it'll sit there until sold, and once it's sold, it gets moved out of finished goods into cost of goods sold. Okay, so let's go. I got Excel pulled up here in the background if I can get to it. I'm gonna close PowerPoint, open Excel. Okay, so I got this made up for us. These you see across the top there, we got our three inventories: raw material, work in process, and finished goods. And so hopefully we love these beautiful T's. I think I can get rid of the grid lines. Let's see, get rid of those grid lines. Maybe that's better. Okay, and so hopefully you remember how these work. Debit left, credit right. And these are all debit accounts, right? So for every one of these, the debit side is the proper side, or the increasing side, if you want to call it that. And so over here for raw materials, we're going to have a beginning balance. Okay, then we would add to this our purchases of indirect materials. My writing's too big. Indirect. I might just do IM. Indirect materials and then direct materials. Okay. So whenever we purchase, we're going to add to that account. And then whenever they are requested, they're going to come out of that account. We'll see that in just a second, okay? And you see down here my total manufacturing cost. We have the DM, the DL, and the FO. And so those are going to show up in work in process. So let's say we're going to start creating some stuff. We're going to pull some materials and we're going to convert it into our finished goods. Well, we're going to have a requisition. We're going to request those goods, and when they're delivered, right? So if we request some or acquire some direct materials, we're going to subtract them from raw material inventory with a credit, and that is going to move straight across. Essentially, I guess I can go straight across. All right, over to here. So direct, they'll go into work in process. Okay, so we've kind of, can I draw an arrow here? I don't know if I can do it or not. Under the gun, I'm not going to be able to do it. So, but those did move over. So we would credit, debit work in process, credit those direct materials. Now, that if we get some indirect materials too, Okay, we're going to credit those out as well to remove them from raw material inventory, but they're going to come down here. They're going to way down here, okay? And so our indirect materials will go into overhead as opposed to work in process. Okay, so hopefully we're not getting confused with our abbreviations yet. Now we will add two more costs here. Let me move this up one. This was not bugging me because I like to go in order. And so we'll have to, our direct labor will come in here next. Now where's that coming from? Where's the credit side? And that's going to be coming from payroll. So probably like a salaries payable account would be the other side of that entry. We can't put, of course, just one entry in. And then the other one's going to be overhead, which can be hard to see at the moment. So down here in overhead, you see it starts with 0. It's a temporary account. So we're actually going to close it at the end of each accounting cycle. And so it'll start our process here with no beginning balance. And we're going to add to that indirect materials and all of those other indirect costs like rent and insurance, etc. Okay, and so it's going to get built up into a number, and then whenever we before we finish, we're going to allocate some of that overhead to work in process. So we'll figure out a way to get a good number there, like a percentage of sale, a percentage of like direct materials or percentage of direct labor. You'll see that here shortly. But whenever we, we're going to, how do I say it? We're going to allocate. So we're going to subtract some of this cost here that's built up. So we're going to allocate some overhead. And when we do that, it's going to come out of that account and it's going to get added to our inventory. Okay. And so then we've got our work in process inventory. Once we finish an item, okay, it's gonna exit, right? We're gonna call so what comes out is called the cost of goods manufactured. Okay. So the cost of goods manufactured leaves the work in process account, goes over to finished goods. Okay. And now it sits there until it's sold. When it's sold, it exits as cost of goods sold. Okay. There'll be some money for that, right? And that cost will come down here, so that money will come down here, right? So, and that's kind of our flow there. So you're going to see a fair amount of that coming forward here with this kind of flow here. There's probably some better videos out there on YouTube that do a better job than I do, or maybe a more entertaining job than I do. But hopefully this made a lot of sense, and I'll try to do some more of these for you in the future. But I'm going to stop here today. I got class in about 20 minutes, so I will see you guys soon. God bless you all, and I'm more than happy to be working with you. Thanks for some emails too. The one last thing, I guess, the midterm, which is coming up here in like a week or two, it's designed just to kind of be like a refresh. Like we're going to hammer in like 6 chapters in 3 weeks. That's crazy, right? And so we're going to use the midterm as a way to kind of pump the brakes and kind of make sure, hopefully, we can remember and apply a little bit, apply what we did. But it's not meant to be like overly difficult, and it actually might be less work that week than it would be for a normal week. We have those 2 chapters to work with. Okay, so hopefully you'll look forward to that, and I expect everybody to do well on it. A lot of it will be some of the same content. I will do it in 2 assignments. Because if I do 2 assignments, that means I can have like multiple choice type of questions without being able to check your work. But then on the problems I'll have in there, I'll give you like 2 or 3 times where you can kind of check your work. Because if you mess up the first part, you'll miss the entire problem. You might know what you're doing, but if you make a mistake early, then you'll miss the whole thing. And I don't want that to be the case, right? So I will give you probably 2 or 3, maybe 3. Check your works on each problem that's going to be on the midterm and final exam. Okay, so anyway, signing off for today. God bless you all. Y'all stay safe, and we'll talk to you soon.